What's up everyone, Eric here again. Today is the 5th of January 2021. This is the opening trade alert for XOP, which is an oil and gas ETF. I just sold the 77.50 strangle for the February 19th expiration cycle, which is 45 days away, and I collected $1.45 per contract. Let's check out the trade tab. Per usual, I'm in the 30 to 60 day trading window, avoiding the weeklies. And right now it's at the 45-day window, which some say is the sweet spot for time decay and selling options. So I went here to the 45-day window. And if you're curious, with XOP, I've traded in the past. I basically do strangles all the time here. It's a relatively low buying power ticker, and it gives you a nice wide spread, and it's relatively liquid. So it kind of checks all the boxes. So I went with the strangle here. And usually I collect somewhere around $2, which is right about here. However, I'm starting to change my tune a little bit, I think. I've kind of been burned with strangles recently, especially with the call side, which is right here. I mean, this is at the 18 delta and we're outside the 1 standard deviation, which seems good, but again, I don't know. I guess honestly, having to roll trades and deal with rolling trades and adjusting them or whatever is just kind of annoying. And for me, and for people I'm trying to share this with, I want this system to be as easy as possible. And if you have to adjust trades and roll trades on a regular basis, that's not really easy. You know, that's more hands-on, not hands-off, right? So others on this system, when they do naked premium trades like strangles and puts and calls, they say that they try to collect around $2 in credit. Well, again, I just feel like, especially lately, the strangles just, I don't know, they haven't really gone my way. So I'm just going to be a little more conservative here and probably going forward. And again, I want to avoid adjusting the trades at all. And who knows, maybe in the long run, if I collect less profit on less aggressive trades, but I basically never lose a trade versus collecting more profit on more aggressive trades, but then I have to adjust and or I lose more trades. You know, the dollar value coming out of each one of those is probably about a wash. And if that's the case, I would much rather just take the easier approach, right? I would just take a less aggressive approach and win more often and then not worry about it, right? Then you don't got to mess around with monitoring and adjusting trades. So anyways, I guess that's the long version of I'm kind of changing the system here a little bit where I'm not shooting for $2 and really a $2 credit on a ticker that only requires about $600 of buying power, that's pretty high, right? I mean, maybe collecting $2 on like $1,000 buying power makes sense. Or, you know, some of those other ones like Costco took $4,000 of buying power and then I collected $300 on the Costco trade. So that makes sense. You know, 300 on 4,000, you know, that's not even 10% of the buying power, right? Where if you're collecting $2 or 200 on 600, I mean, that's a third of the buying power. That's 33% of the buying power you're collecting. So it's kind of, you can't really do a blanket statement like, oh, always collect $2 on naked premium trades. Because if the buying power is really low, that's a much more aggressive trade typically than when the buying power is high, right? And honestly, I think that's where it's come up short for me. I've gone too aggressive on lower buying power trades, and it's kind of bit me in the butt with these strangles. So in the past, I would have gone something like this, right? I'd collect $1.90. I'd be out here at the 19 delta and the 12 delta. As you can probably guess here, though, I went up here to the 50 strike, which is the 11 delta on the put side. And I'm right there at the 1 standard deviation line, which is good. And then I came down here and I bumped this out a little bit farther. It seems like lately I've been getting burned on the high side. And this kind of lines up with that, right? This is at the 15 delta, where this one up here on the put is only at the 11 delta. So if you would just go equal strikes to the 1 standard deviation, that's at the 19 versus the 11. So that doesn't kind of make sense, right? So I tried to equal it out more. So this is the 15 and the 11. And now I'm a couple strikes farther out of the money at 77. And look at that. I'm still collecting $1.53. And that's only on $630 of buying power. So let's do some math real quick. If you have $1.53 or 153 divided by 630, you know, I'm collecting about 24% of the buy-in power on this trade, right? $1.53 is roughly 24% of the required buying power. So that seems like a pretty good ratio, 25% of the buying power. So that gives me an 80% pop, 91% P50. Max profit is $153, but I'm shooting for half of that, so roughly $75, $76. The max loss is technically undefined. If this trade would go against me on the call side, in theory, my loss could be infinity. In reality, that's not going to happen, but I just don't know what my max loss is, so it's undefined. And then the buying power effect currently is only about $630, which is great. That's definitely a lower buying power. And as I mentioned in my December trade review video, I'm going to try to stick to lower buying power stocks because really, why not? That's the best bang for your buck, right? And I just want to show you that you can get, 10 or 12% per month return on capital. So I'm going to try to do that this month and we'll see how it goes. Anyways, a strangle is an undefined risk trade. If you want to define your risk because you have a smaller account or you just don't want to deal with undefined risk trades, you can buy protective wings on each side and turn this into an iron condor. So I typically go 5 points wide, so that'd be out here at the 82. You would buy the 82, and you go up here, and you would buy the 45, and now that's collecting 88 cents, which actually isn't too bad. I might just leave it just like that. It's a little more conservative, but remember, this kind of is going along what I was saying earlier with the strangles. With the iron condor, a lot of people say you should collect at least $1. Well, 88 cents, that's almost $1, but it's just being slightly more conservative, right? So if you're shooting for 50%, that'd give you 44 bucks instead of if you got $1, you'd be getting like 50 bucks, right? But it's up to you. This is all personal preference, right? I mean, I'm going a little more safer, and in my opinion, it's almost never a bad thing to be a little more conservative. You're just not going to get quite as high return on profit potentially, but in theory, it's safer, right? If it's more of a sure thing, then that's worth something. So anyways, this could work here at 88 cents. If anything, I would maybe go one strike more aggressive here. That gets you to 90. And then if you go one strike more aggressive here, that gets you to 97. So there you go. That's almost $1. You're selling the 12 delta, which is the 51 strike, and then you're selling the 76 strike at the 18 delta. If I did this, that'd give me a 75% pop, 82% P50, max profit of 97, but I'd be shooting for half of that, so roughly, $48, $50. My max loss is now locked in at 403, and then my buying power effect is also locked in at 403. The 403 comes from you have a 5-point wide spread, which would be $500, and then you simply subtract what you sell it for, which is 97 cents. So 500 minus 97 is 403. Well, it just ticked 1 penny there, so 403. There you go. 500 minus 97 is 403. So that's how you get the max loss and the buying power effect, and then your max profit. All right, I think that covers everything. I suppose we can look at the chart real quick, even though I basically didn't do any technical analysis on this trade. All right, so here's XOP's chart. Again, I didn't really do any analysis here. XOP is just kind of one of those tickers that I trade on a regular basis, and I pretty much always do strangles. So I was just looking for a trade here, and that's what I decided to go with. So today I opened the trade. If I move this line out of the way here just for a second, today has been a monster day. It's up currently over $4, which is over 7% today. When I opened the trade, it looks like I was near the top of that candle at 62.75, and then I sold the 77.50 strangle for $1.45. And right here is the 50 strike. This is the 77 strike up here. And ideally, I'm just looking for this to hover right around 62, 65 bucks. And in 2 to 3 weeks, time decay kicks in and I get paid. If it pressures the call side or if it pressures the put side, then I'll stay in the trade longer. And then if it breaches one side or the other, I would potentially have to roll it or take a loss. All right, I think that covers everything. I will keep you posted here in the coming weeks, whether I adjust the trade or close the trade or do anything like that. Let me know if you have any questions. Keep trading small, keep trading often, and I will see you in the next video.